Hey everyone, and welcome. Today, we're doing something a little bit different. We're going to take just one single day in the US stock market and really unpack the stories behind the big moves. Because, it's never just random numbers on a screen, there's always a story playing out. All right, let's get into it.
So here's the big question for today. What's the deal? What connects a sneaker company having a fantastic day to a media giant taking a surprise tumble? How does a plan to literally deliver cash to your door have anything to do with a bunch of executives selling off their own stock? Well, today we're going to connect those dots and find the hidden themes that were really driving the market.
So our first theme, it's all about earnings season. That time every quarter when companies open up their books and tell us how they did. But as you're about to see, the market's reaction, well, it's often about way more than just the headline numbers. It's really about the story those numbers are telling.
Okay, check out this contrast because it's pretty fascinating. On one side, you've got Disney. Now, they actually beat their earnings per share, what we call EPS, expectations. That sounds pretty good, right? But they missed on revenue, and the big problem was weakness in their cable TV division. Then on the other side, you've got the running shoe company On Holding. They didn't just beat expectations, it was a huge surprise. And this is the really important part. They raised their forecast for the future.
And here's where the rubber meets the road. Even with that earnings beat, Disney's stock just got hammered, dropping almost 8%. So why? Well, because the market looked right past that one good number and focused on the weaker story. That revenue is slowing down, and the problem with their traditional TV business just isn't going away. The story mattered so much more than the stat.
Now, look at the complete flip side. On Holding just exploded, jumping over 18%. And that wasn't just because they had one good quarter. It's because they basically told investors, hey, this great quarter, it's just the start. The future looks even better. And that kind of confidence, that forward-looking story, is pure gold for investors. And man, did they respond.
Okay, so let's move on to our next theme, which builds right on this idea. See, earnings reports are about the past, but the market is always looking to the future. And that brings us to companies that are making these really bold moves to kind of redefine what their business is all about.
Just take a look at Robinhood. It started out as a pretty simple stock trading app, right? Then they added crypto. Now their CEO is saying that prediction markets are their fastest growing part of the business. And their latest move? They're teaming up with GoPuff to test out a service that will literally deliver cash from your account right to your front door. This isn't just adding a little feature. It's a huge pivot towards becoming this all-in-one financial company for your daily life.
And it's not just happening in finance either. Hims&Hers Health, you probably know them for telehealth services. Well, they just launched a new service called Labs. This thing is a full-on health monitoring service. It's a huge expansion for them, moving from just treating specific issues to becoming a platform for your ongoing health. They're telling the world they want to be a much bigger part of your healthcare journey.
So we've seen the big, loud signals, right? The earnings reports, the major strategy shifts. But what about the quieter signs, the whispers? Let's talk about reading the tea leaves, the signals that come from company insiders, and some of the wild ideas coming out of Wall Street.
So first, let's just make sure we're on the same page about insider selling. All this means is when high-level execs, the people who know the company inside and out, sell their own shares. Now, there could be a million reasons why they do it, but the market often reads it as a potential sign that they aren't super confident about the company's immediate future. It's a really subtle but powerful signal.
And on this one day, those signals were flying all over the place. The CEO of Roku sold a big chunk of shares. The COO at Lemonade sold shares worth over $3 million. We also saw sales from top execs at Progressive, Hims&Hers, and Wayfair. Now, it doesn't automatically spell trouble, but you can bet it's a pattern that gets investors talking.
And then you get these really creative signals, kind of out of left field, like this one from an analyst. They put out a report suggesting that Duolingo, the language app, should buy chess.com. It's a totally out-of-the-box idea, but it does something important. It gets the market thinking about a company's potential in a whole new way. It's all part of the big conversation that shapes how we see these companies.
All right, for our final theme, let's talk about something that might be the most overlooked thing of all. We've talked a lot about what happened, but what about what didn't happen? For most companies, the day was really just defined by silence, and that silence is its own story. So here's the deal. With that big rush of earnings season mostly over, a lot of companies enter what's called a quiet period. There aren't any big announcements, no flashy press releases. The focus just shifts inward. It's all about actually doing the work, executing on the plans they've already laid out. So, no news doesn't mean nothing's happening.
And this list of quiet companies includes some absolute giants: PayPal, Block, SoFi, Upstart, Teladoc, Deckers, not a peep of major news out of any of them. And this is really important context. It just reminds us that those huge dramatic moves we saw with Disney and on-holding, they were the exceptions, not the rule for the market that day.
Okay, so what's the big picture here? What does this all mean when we put it together? We've looked at earnings, big strategic bets, insider moves, and even the absence of news. Let's try to boil it all down into a few key lessons from this one day in the market.
First off, the story is everything. On-holding's exciting story about the future totally beat Disney's mixed results from the past. Second, you've always got to watch the horizon. Companies like Robinhood and Hims are making it clear that their future is going to look a lot bigger than their present. And finally, you have to listen to the whispers. Those subtle clues from insider sales and creative analyst calls, they add a whole other layer of meaning to the main story.
And that kind of leaves us with one final question to chew on. Now that the noise from earnings season is fading away, are these the signals we should really be paying attention to? The big strategic bets, the moves from executives, the quiet work happening behind the scenes? Maybe these are the real breadcrumbs that show us where the market is actually headed next. Thanks for tuning in.